This is Group 2's presentation on market developments and investment banking by Stephen DeWitt, Arch McDonald, Logan Locke, Luke Johnson, and Kristen Brimhall. In the global economy news, Greece is looking to the European Union for another bailout as they near another economical crash. The EU president said that the debt is especially bad and we need to get the current plan back on track. Greece is looking at a 14.5 billion euro bond payment at the end of March and is counting on this aid to make this payment. The EU wants Greece's political parties to deliver more savings and from those savings to face the pressures of it to be carried out. In Italy, yields went from 6.09 as they plan to sell 7.5 billion euros of debt at this year's largest bond redemption. In China, the government will continue to curb the property market to help bring costs to a reasonable level and to help fine-tune the growth in China. In France, the consumer spending dropped in December as the surge in jobless claims and rumors of tax increases are floating around. Consumers are not spending as much money at this time. As for the United States, the GOP race for the Republican Party is still going strong between Mitt Romney and Newt Gingrich. The main discussion between the two is whether which one would be better for the economy and the current state that we are in. In recent LBO transactions, Sanlam Ltd. and South Africa-based insurer said that it is in talks with the U.S. buyer and lender J.P. Morgan Chase Fund Administration unit in South Africa. The insurer will form a joint venture with the London-based Old Mutual plc to purchase the operations, which administers about 127 billion of assets. Johan van der Muur, head of Sanlam's investment unit, said this by telephone from Cape Town.
Multiple reports released this week addressing the current economic conditions. The Conference Board reports that its index of consumer confidence retreated 7 points. The present situation index, which is a gauge of consumers' assessment of current economic conditions, dropped to 38.4 from projected 46.5, showing a lack of confidence about business conditions in our country. The Fed also released its projected economic growth and lowered it between 2.2 and 2.7 in 2012 and 2.8 to 3.2% in 2013. The Fed said on January 25th that they expected interest rates to stay near 0% and inflation will be set at a new goal of 2%. In good news, the Labor Department states that the economy added 243,000 jobs in January. The government's job report released on Friday shows the unemployment rate at its lowest level in 3 years. This helped propel the Dow to its highest point since May 2008. In regulatory, accounting, or tax developments, on Thursday, the U.S. Department of Labor unveiled a final 401k fee disclosure rule. This requires plan providers to give more details about what employers pay for retirement plan administration and other services. The plan is intended to lead to more money in accounts for retirees. The fee disclosure rule will apply to all providers that work with 401k plans, such as Fidelity Investments and Vanguard Group. They will have to disclose to employers specifics about their fees, record keeping, and retirement plan management. Harsh consequences are there for failure to comply with these rules. Employers will have to terminate relationships with providers that do fail to comply. At the same time, the Treasury Department unveiled 2 rules that would make it easier for employees to use their retirement accounts to buy annuities to provide lifetime income streams. In other regulatory news, futures on orange juice settled as a ban on juice imports into the U.S. became less likely. The FDA released a statement Friday after the market closed that the agency had no plans to ban orange juice imports. And according to Congressional Budget Office, corporate tax receipts as a share of corporate profits have hit their lowest point in 40 years at 12.1%.
Investment banks in the U.S. and in foreign markets have made lots of news in recent weeks. For Bank of America, Christian Meissner was named head of global corporate investment banking last week. He was hired by the bank in April of last year from Nomura Holdings and was head of investment banking for Europe, the Middle East, and Africa before taking on this new position. Meissner will be in charge of capital markets operations that underwrite stock and debt offerings, as well as bankers who advise corporations on mergers and other transactions. Additionally, B of A, along with JP Morgan Chase and Wells Fargo, were sued by the state of New York. The banks were accused of fraud and deceit in connection with the use of the MERS real estate sales tracking system. This is just the latest shoe to drop in the mortgage meltdown crisis from 2008. The big winner of the week was Morgan Stanley, as Facebook chose the firm to be the lead underwriter for its IPO. The deal is believed to be worth about $5 billion, but this figure is likely to change. Morgan Stanley stands to earn about 1 to 1.5% in commissions for leading the deal. JP Morgan and Goldman Sachs will also team up with Morgan for the IPO. Morgan Stanley also announced they would be cutting compensation by as much as 30%. Stock grants will also be used to help employees have a more long-term focus. Morgan's CEO summed it up best by saying, "If you put your compensation in a one-year context to define your overall level of happiness, you have a problem which is much bigger than the job." Citi announced they would be shutting down their proprietary trading desk. This is due to the eventual enactment of the Volcker Rule, which will put severe restrictions on the practice of placing trading bets with the firm's own money. Additionally, Citi announced they would be leaving the mortgage brokerage business, which accounted for 8.6% of their overall mortgage originations in 2011. Most of the employees will be reassigned. In other news, Goldman Sachs reported a 26% drop in revenue and a 47% decrease in net income from 2010. Goldman also announced new co-heads of investment banking in the Asia-Pacific market. UBS and Credit Suisse are being investigated by U.S. and Japanese regulators for possible manipulation of the LIBOR. Specifically, the regulators are investigating how the LIBOR was set for U.S. dollars during 2006 to 2008, just before the financial crisis. Finally, JP Morgan Chase was sued by Asset Management Fund. AMF alleges that JP Morgan provided them with faulty information regarding underwriting standards for $515.6 million in mortgage-backed securities.
Two developments in merger markets we want to focus on today start with Glencore and Xstrata. Last Thursday, two Swiss companies, Glencore International AG and Xstrata plc, were in talks about a merger. Being the world's most powerful raw materials companies, this merger would combine the two into an $80 million company that would have a huge impact on industries that supply automakers, chocolatiers, and power companies. This unique merger of a mining company with a trader of raw materials has made a goal to have a deal announced tomorrow. The second is the merge between the New York Stock Exchange Euronext and the Deutsche Börse. After a year of the merger push, and as explained in last week's presentation of SEC approving the merger of New York Stock Exchange Euronext and Deutsche Börse, they finally ended it on Thursday by dissolving the deal. To avoid creating a quasi-monopoly over European exchange-traded derivatives market, the European Commission rejected the merger on February 1st. Although much was spent by each company throughout the past year to try to implement the merge, they both agreed to a mutual termination, not leaving either company liable for the €250 million breakup fee that was stated in the deal terms. A sense of financial freedom, now that the merger has dissolved, makes it so they don't have to go to the other for approval of purchases or contract changes.
All right. Now we'll take a look at some recent equity, debt, and convertible financing deals. We'll start with debt financing, and we'll also take a look at the banks that led these transactions. Procter & Gamble launched a $2 billion bond issue. This sale features $1 billion of 2-year floating rate notes and $1 billion of 10-year fixed rate notes. They say the objective of this bond issuance is to raise funds for general purposes. Citigroup, Goldman Sachs Group, and JP Morgan are leading this sale. Praxair, an industrial gas supplier, sold $600 million in a 10-year bond sale at 65 basis points over the treasury rate. This debt financing will repay short-term debt, fund share repurchases, and also for general corporate purposes. Bank of America, Merrill Lynch, Citigroup, and HSBC are leading this sale. TransDigm Pharma, a drug development company, has announced that it has landed an additional $9.3 million in debt financing from Oxford Finance LLC and Horizon Technology Finance Corp. The CEO says this money will help TransDigm take one of its drugs to a new drug application later this year. Okay, now we'll take a look at a convertible financing deal that occurred. A company called Ascot Mining has issued $500,000 of unsecured convertible bonds. The bonds are convertible into ordinary shares at 25 cents apiece and carry an interest rate of 9.75%. The bonds also confer 2 million warrants over Ascot's ordinary shares, which are exercisable for a period of 24 months at an exercise price of 25 cents. Okay, now we'll take a look at some equity financings that happened. First is in Bangalore, India. Ujjivan Financial Services, a microfinance company, they raised $25 million in its fifth round of equity financing. The latest round of capital infusion came largely from two new foreign institutional investors, FMO and WCP. They claim to have a strong faith in Ujjivan's business model and believes in what they are trying to accomplish. This round of equity funding has made Ujjivan one of the best capitalized microfinance institutions in the country now. And the last deal we'll take a look at is Stevia Corporation, a farm management company focused on the economic development of stevia, the fastest growing product in the alternative sweetener sector. They're pleased to announce that they entered into an equity purchase agreement of up to $20 million of the company's registered common stock by Southridge Partners. The objective of this financing is to further accelerate its commercial development of stevia and related markets. So that's going to wrap it up for Group 2's presentation. Thank you for listening.